Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Jason Reynolds, and today is the 20th of July of 2023. We're committed to demystifying the numbers, bringing you analysis that cuts through the noise. So grab your coffee, sit back, and let's get started. The energy on Wall Street this week is positively electric. We've seen a great start to the second quarter earnings season, with the S&P 500, Dow Jones, and the NASDAQ Composite all pushing upwards. A testament to the tenacity of businesses even in challenging times, wouldn't you say? First on our agenda is a deep dive into the financial sector. The spotlight is on Goldman Sachs, a stalwart of Wall Street. In a surprising turn, the investment banking giant has reported a significant dip in profits. CEO David Solomon's earlier prediction of a headwind-heavy quarter appears to be coming true. Despite this, we should note that the overall financial health of Goldman Sachs remains robust. It will be interesting to see how they navigate the rest of the quarter. Now let's shift our focus to the trailblazers in the tech industry, starting with Tesla. Elon Musk's electric vehicle behemoth released its Q2 report recently, and it was a mixed bag of sorts. The revenue and earnings beat expectations, with revenue at $24.9 billion, representing a hefty 45% gain from the same quarter a year ago. That's definitely good news for Tesla investors. However, it wasn't all smooth sailing. Tesla's gross margins for Q2 fell slightly below expectations, coming in at 18.2%, a drop from the 19.3% in Q1. Margins are a closely watched indicator, so this dip, even though minor, could raise a few eyebrows among analysts. An important development worth noting is Tesla's plans for its German Gigafactory. The company is slated to ramp up production, an indicator of the growing global demand for electric vehicles. This could play a pivotal role in Tesla's future growth, especially in the European market. In other tech news, Microsoft is turning heads with the announcement of its new AI-related product, M365 Copilot. The pricing, set at $30 per month, exceeded Wall Street expectations. This sophisticated AI-powered chatbot promises to reformat PowerPoint slides, summarize emails, and even draft content based on user needs. Analysts are buzzing with the potential impact of Microsoft 365 Copilot on Microsoft's future revenue. The result? Microsoft's shares have seen a healthy climb. This move is a testament to Microsoft's focus on innovation and their ambition to become a leader in the AI space. But the tech news doesn't stop there. We've received reports that Apple is working on its own generative AI tools. This move could potentially put Apple head-to-head with ChatGPT. Codenamed Ajax, this technology could serve as the backbone of Apple's AI software initiatives. Yet, Apple being Apple, they're known for seamlessly integrating their tech into existing products rather than making overtly flashy announcements. While this development has already excited investors, leading to a hike in Apple's shares, we should remember that Apple's approach to AI might be more of a subtle integration rather than a direct, standalone offering. What a week it's been, folks! With earnings reports exceeding expectations and tech giants like Microsoft and Apple pushing the envelope in AI, we're witnessing the unfolding of a fascinating financial narrative. We'll keep you updated with more news and analysis next week. Remember, knowledge is power, so stay informed and make your decisions wisely. That's a wrap for today's session. I'm Jason Reynolds, and it has been a pleasure guiding you through the financial highlights. Stay tuned, stay invested, and I'll catch you next time.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.